Welcome to today's video on the head and shoulders price pattern. Dr. Barry Burns here with Top Dog Trading, and we're going to help you learn how to stop losing money with this pattern and hopefully start making money with the pattern. Now, the head and shoulders price pattern, even though it's one of the most common and well-known patterns in the world for trading, it is often traded incorrectly. Most people don't know how to properly identify, let alone trade, a head and shoulders price pattern. So let's jump right into it, and I'm going to start with a little quiz. Let's see if you know. And by the way, I hope you get this wrong. That doesn't sound very nice, does it? I hope you get it wrong. Why would I hope you get it wrong? So that you learn something. Because if you don't get something wrong, that means you wouldn't have learned anything today. So there's your low. There's another low, a lower low, and there's a higher low. Alrighty, and so as we can see here, price is coming down, makes that low, goes back up, makes a lower low, goes back up, makes a higher low, and goes back up. Okay, so here's your quiz. Identify that price pattern. Go ahead, you can write it down, you can just say it in your mind if you want to, and let's see if you get it right or wrong. Now, most of you are probably saying head and shoulders, or some of you might be saying inverse head and shoulders, or reverse head and shoulders. That would be a little more accurate. However, all three of those would be incorrect. So, congratulations. If you said that, you got it wrong. And I say congratulations because, again, I want you to leave here learning something that you can take with you and apply to actually make money in the markets. Not that I have any ill will toward you whatsoever. No, I have goodwill toward you. I'm trying to help you. Okay, so let's take all this off of here and let's see why that is incorrect. So there's three reasons we're going to cover here, and the three reasons all file under the category of an ancient Chinese saying that I just made up. Well, I don't know if I made it up. Anyway, the ancient Chinese saying is, the dollars are in the details. And that's very true of technical analysis. Everybody in their parakeet knows a head and shoulders pattern. Well, they think they do, but they don't know the details of it that would actually make them money as opposed to lose money. So let's look at it. First of all, the thing is we got to look at the bigger context. Okay, so the bigger context means that we've got to look at more than just a low, a lower low, and a higher low. So that's the first thing. That alone, just that, does not make a head and shoulders pattern. So let's bring more context in here. And wow, look at that. So now that we can see more of the chart, we could see that, yeah, if you would have traded that, you would have lost money. Let's identify our low, our higher low, or our lower low, and our higher low. Even if we use this one, right, we could have used that one instead. Sometimes, and that's a problem with these multi-bar price patterns, is they can be a little bit subjective. Which of these lows would you have used? Well, it depends on what time you saw it. So if you're trading on the hard rate edge of the screen, you might say, oh, that's a higher low. And then you come back and, oh, that one was broken. So you could say, oh, that looks like a reverse head and shoulders pattern or inverse head and shoulders pattern. And they're like, oh, darn, that didn't work. And then you might get stopped out here. And then you say, oh, wait, but this is still a higher low. And then come back in and enter with money. And then get stopped out again. And wonder why. What the heck? These head and shoulder patterns don't work. Well, they work. They can work. But let's get into the dollars that are in the details. So number one is it is a pattern that basically only works because of it being a self-fulfilling prophecy. What do we mean by that? It works because a lot of people know about it. As I said earlier, it's one of the most common charting platforms or charting patterns that most everybody in their parakeet knows about. So once everybody in their parakeet knows about something, then people start to trade it. You got the masses trading it, and it becomes a self-fulfilling prophecy. So first of all, that was not a inverse head and shoulders pattern. So how do we know that? Number one is because it was not the end of a trend. So a head and shoulders pattern, or inverse in this case, is by definition a trend reversal pattern. So again, let's dive deeper into the scaling of this. And as you can see, so in other words, before you can identify a head and shoulders pattern, there must be a big trend before it. So in this particular case, we did not have a big trend before it. We were looking at, this, and let's just use this one here. But was there a big trend down here? This here, my friends, that does not qualify as a trend. That is not the general extended direction of the market. It's just kind of been going sideways. So think of Elliott wave, and I don't personally use Elliott wave, but think of a 5-wave pattern. That's a trend. Big multi-wave, big multi-cycle pattern that goes on for a long time in an extended direction, covering a lot of price. These are that's really just a half cycle. So if you don't have a big trend, you cannot have a head and shoulders pattern. So that's the first thing you start with. A lot of people will tell you, okay, well, I think that head and shoulders pattern works because there's been a lot of statistical studies done on it, so it's not just a self-fulfilling prophecy. It's actually statistically significant. Well, there's a couple of things that you need to understand about that. First of all, I disagree with that. I've always been one to be happy to be controversial. So, yeah, I don't give a mouse's left patootie about those statistical studies. Man, I'm going to get it for this. Yeah, type into the comments if you disagree with me on that. I'm sure you do. Some of you do, at least. And I'd love to hear the counter-arguments. But here's my argument. Defend yourself, sir. I'm happy to. So, number one, those statistical studies were primarily done on daily charts. Right now, this happens to be a 5-minute chart. All right, and that is shown right here. And you may not have known that when you did the quiz, and that's perfectly fine. I can understand that. But so first of all, if you're going to create a system that's dependent on any previous statistical studies done, almost all of them are done on a daily chart. So that does not necessarily apply to intraday charts, like a 5-minute chart or a 144 tick chart or whatever. You can't apply those statistics to another time frame. And then the other thing that I would say as to why I don't care about the statistical studies is because of, I don't know if you ever heard this phrase before, but past performance is not indicative of future results. Ever heard that one? Yeah. That is such an important statement. We are required by the regulators to share that on our websites, before webinars, on advertisements, right? Everywhere. We're required to. That's how true it is. Past performance is not indicative of future results. Well, what are these statistical studies? They're all based on past performance. And the regulators are telling us, yeah, but that's not indicative of future results. So that's why I don't give the mouse's left patootie about statistical studies of the past of history. You know what, I'll do a part 2 on this. And on that one, I will show you the best scenario to actually take them. This one was to keep you out of trouble. This one, consider it, okay, how to stop losing money on head and shoulders patterns. Okay? And the next one will be how to increase your odds of being successful with head and shoulders patterns. Oh, by the way, before you even get to the next gift, subscribe to this channel. Because if you do, then you'll get notified as to when part 2 comes. Click on the little bell there and subscribe. First of all, click on the bell, and then when part 2 comes out and all my other videos, you'll be notified. I usually do about 1 a week or so. Sometimes I'll do 2 a week. And then also, like I said, I want to give you one of my favorite trade setups, absolutely free. I give this out to the general trading community. It's called my rubber band trade. And as I said earlier, I know you hear a lot of stuff from a lot of people and you don't know what to trust, and I totally get that. I've been there. So what I've decided to do is just give you one of my trade setups absolutely free. Rubber band trade, and try it. Try it on a simulator first, obviously. Test it for yourself. And if you make money with it, great.